So I'll now move to the last chapter for our discussion. Okay, first I'll set the context for this chapter, which is on cost management techniques. So we are going to start with an area called as cost management techniques. You can open the book later on, just listen for some time. Cost management techniques. Now coming to cost management technique, in chapter 1, when I started initially, I told that there is a strategic cost management, there's a traditional cost management. Strategic cost management is one which improves the strategic position of a business, which improves the strategic position of a business. What is strategic position of a business is either through cost leadership or product differentiation, and the objective is to reduce cost, at the same time improve the value or quality provided to the customer. That was the focus area. Then suddenly we learned later on saying that the business environment has undergone a rapid change. Because of this, customer has become the king. It has become a customer's market rather than a seller's market. In order to meet the needs of the customer, it is very critical that you will have to keep costs under check. It is necessary that cost should always be under check. To control cost, one element we saw is waste elimination. Which was lean system and innovation. Under lean system and innovation, we saw different types of waste which can be eliminated. Example, if your materials are not properly organized, you can eliminate that kind of a waste using 5S technique. If you are maintaining more inventory, raw material inventory can be eliminated through jet purchasing. FG inventory can be eliminated through jet production. Unnecessary movement of material people is happening, you can eliminate through cellular manufacturing. So we learned multiple techniques to eliminate different kinds of waste. Now this chapter focuses on the overall cost side only, not only on the resources side. Resource reduction will automatically lead to cost reduction, but here the major focus is only on the cost reduction. So in this chapter, first you will learn about what is cost control vis-a-vis cost reduction. These two terms you could have come across at CA inter level itself. In your chapter 1 itself you could have come across, but we are going to spend a little bit of time on what is cost control and what is cost reduction. After understanding cost control and cost reduction, I'll move to an area called as different techniques of reducing cost. Some of these techniques I kept on talking about at few places. The first technique which we are going to talk about is target costing. How target costing can help an organization to become competitive in the market. Then we also have something called as life cycle costing. I think this chapter also has Pareto's analysis. And you may have an area called as environmental management accounting. So what is environmental management accounting is going to be an extension of an area called triple bottom line. You learn triple bottom line, and extension of that is going to be EMA. Pareto's analysis will help you in doing prioritization. We just saw, I think in the last case study, where some 80-20 was mentioned. So that is basically a Pareto's principle. So we are going to talk about that as well. We are going to talk about two major techniques called as your target costing and life cycle costing. Subpart also, this also has an element called as Kaizen costing, but I think Kaizen costing we have covered it earlier, but even Kaizen costing points can come here. So the objective of this chapter is to manage cost, manage the cost. In order to first do that, I'll have to understand what is cost control and what is cost reduction. Cost control is basically ensuring that cost do not exceed a set level. There is a limit which I have fixed, and I don't want to go beyond that limit. There is a budgetary limit which we have fixed, and we don't want to exceed that budgeted limit. When you do cost control, there is a possibility of quality reduction, or there is a possibility that someone in the organization, some of the stakeholders may get impacted. Example of a cost control. I have a budget, saying a travel budget. There's an organization which has a travel budget. The travel budget is 1 lakh rupee. This is for all employees put together. In your audit firm, you have a budget. Travel budget is 1 lakh. Till you reach 1 lakh budget, I was allowing you to go to client places freely, and I was giving you reimbursement of whatever expenses you were incurring are based on the allowances the company has fixed. Now what has happened is, from this stage, you are moving to another stage. What is the other stage you are moving now is, from this approach which you are doing, Now you suddenly says that I cannot put a limit on my employees like this. Earlier we were using XYZ traveling agency. We found that this guy has a lot of wastage which are happening, so let's change to another agency who will do a better planning of our travel needs, and that leads to a permanent reduction in cost. If you put a budget limit, what will happen is moment you touch 1 lakh, either I don't allow you to travel. If I don't allow you to travel, client gets impacted. Why client gets impacted? Because it will become slightly difficult at the client's end. So a lot of things have now moved to a situation where you work from office or you work from your home and then do your requirements. But still, earlier erstwhile what used to happen is every audit used to be physically done. You used to go to the client place and get it done. So now if you have to do something like this, client may get impacted. Else I tell employees that you use your transportation, I'll not reimburse. Employees get impacted. Or I tell them that okay, earlier I was giving a cab facility, now maybe use a public transportation, because of which what needs to happen is you need to travel 1 hour early and you reach home 1 hour later. So someone will get impacted because I put a limit like this. That's a cost control. That's a cost control. Standard costing is a typical example of cost control. Standard costing is a typical example of cost control. Cost control is a preventive function. Cost control is a preventive function. Till now I have been always telling preventive is good, but here corrective is good, not preventive is good. Cost control is a preventive function. I don't want you to go beyond that limit. Cost reduction is a corrective function. Why is the budget exceeding? I understand that. Once I understand that, I get to know that some of the article assistants are traveling unnecessarily. There was no need for a travel requirement, but still they went ahead traveling. Okay, that's a problem. Then I'll have to rectify this problem. Some problem you'll understand, and then you start rectifying that problem. So you have two approaches: cost control and cost reduction. Cost control is regulation of cost by executive action. Continuous comparison of actual with standards. Continuous comparison of actual with standards. This will lead to a temporary savings in cost. Sometimes there can be issues with even product quality. Cost reduction is achievement of real and permanent reduction in cost. This attempts to find out the genuine savings in cost. It does not even consider that there is a concept like a budget. There's a concept like a budget. It challenges the budget set. You can even think about Kaizen costing in picture. Kaizen costing does not believe in the budget which is given. Else what you needs to happen in Kaizen costing is, we have told that instead of doing a budget or giving a standard cost, you give a cost reduction target and compare with the actual cost reduction which has happened. Now an organization can do cost reduction in multiple places. You can do cost reduction in your office, in your product design. The first major cost reduction will happen in product design, because under the product design 80% of the cost will get logged in. 80% of the cost will get logged in. I think this chapter specifically you may have to read the detailed theory once. You may have to read other chapters also. I have told you, but I would want you to read, because this chapter I think the detailed theory has a little bit more coverage than what I've covered in the summary. But even for other chapters, at least 1-2 times reading has to be done of the detailed theory. I have not told you to buy hard stuff, but at least a reading of that. Once you read that entire area, maybe certain more points will get registered. When you read 10 points, you will remember only 5 points, but when you read more and more, some extra points can get registered. So this chapter at least I would want you to read the detailed theory later on. But your cost reduction, first thing is product design. Product design, why it is very critical is 80%, historically it is seen that 80% of the cost gets logged in at the design phase. A classic example of cost reduction under design is Tata Nano. Under Tata Nano, what happened is the Tatas made an announcement saying that they want to come out with a car which is around 1 lakh. Because of which they prepared a design. Maybe the cost is not meeting in. They further tried reduction. I think the detailed case study has some of the points. The detailed notes has some of the points. They ended up doing this. The company made this plan due to its product design, cutting unnecessary parts, simplicity of the interior, simple exterior, one wiper, removal of left side mirror, using plastic exterior part, among others. So they tried doing all these changes. Because of these changes, they were able to pull down the cost to a 1 lakh level. Now ultimately this did not succeed because of other reasons, but they tried doing something because they felt some of this doesn't have an utility. Some of these requirements does not have a utility from an end customer. Some of them removal can have some impact also to the customer, but there is a huge price reduction because a normal car will cost you some around 4 lakh 5 lakh at that time. This was costing only one car 1 lakh rupees. So obviously they had to also compromise little bit here and there on the design part, but the major cost reduction will happen through the design side. Your major cost reduction will happen through the design side. Second, reduction can also happen at the office side on the factory layout. Factory layout, an example was on your cellular manufacturing, which was trying to focus on removing the unnecessary movement of men and material. So product design, factory layout, production plan, program and method. What is production planning is basically understanding what the organization wants to do. Method is there are different ways of manufacturing the product. Now these are the techniques they have given for cost reduction. Some of the techniques we are going to discuss in detail, some we have already discussed. One is value analysis. What is value analysis is? There are three terms: value analysis, value engineering, case and costing. This value analysis, value engineering, whatever I'm saying, you're going to see it again in some time, but let's just understand what is value analysis or value engineering. Value engineering is basically analysis of the various activities in a process of a company and eliminating the non-value added activities. Value engineering is normally done for an existing product. Value engineering is done for a existing product. Value analysis is same as value engineering. Value analysis is same as value engineering, but it is for a new product. It is for a new product. So before nano could have been manufactured, I do value analysis to understand if some of the activities are not going to add any value to the end customer. Maybe the left side mirror was not adding value. Maybe whoever is driving car, they may feel that left side mirror is needed, but they were concluding that left side mirror was not adding value. Simple interiors could be done, simplifying the exterior. So they tried removing one wiper. So they tried doing a lot of things in order to reduce cost. So one technique is value engineering. Second is your inventory management, where you have just in time and EOQ, both have been discussed. Just in time you discussed at final level, EOQ had discussed at inter level. We had done one problem on EOQ even in decision making chapter. Then BPR is business process reengineering, which is also already seen. Target costing is something which you're going to see here. Case and costing is also something which has been seen. Extension of target costing will also be something on life cycle costing and environmental management accounting. Okay, let's now get into target costing, which is the second segment of the chapter. I think one of the most important part, be it from a theory point of view as well as from problems point of view in this chapter. So let me first explain what is target costing. Then I'll get into the steps and other things. Target costing is basically a tool to identify what should be the cost price of a product of a specified functionality. For example, Bharadwaj Institute is providing you SCMPE classes. The cost of these classes, cost not the selling price, the cost of these classes, if we are providing regular classes with a recording being given to students, the cost should ideally be 3,500 or 4,000, 5,500, some number they decide on, some number they decide on. So what is target costing is a scientific way of arriving at a cost for a product or a service of the specified functionality. What you do in target costing is, technically earlier there were only 4 steps. ICI revised their theory. They expanded the 4 steps into some 8-9 steps, but the crux remained the same. So let me first explain the crux of target costing. Step 1 of target costing is identify target selling price. Identify target selling price. Who is going to identify this? Is the company will identify this with the help of market survey, research, everything. There is no calculation needs to be done here. Market will provide you some indication on the price at which you can sell the product. So identify the target selling price of a product. Step 2 is compute target profit and target cost. Target profit is something which is determined by the management or the shareholders or the company. The company will decide how much profits they want to generate. How much profit. So my target selling price was initially 1000 rupees. Target profit is 200 rupees. Hence target cost is 800. Target cost is 800 rupees. Selling price, market determines it. Profit, the management determines it. They subtract. Step is compute actual cost. Compute actual cost. Unfortunately, okay, you can take this example of Tata Nano itself. Target selling price was 1 lakh. Target profit, they'll still have some profit target. Let's assume it's 10,000 rupees. And the cost was 90,000. Actual cost when they did first time analysis, it would be 1 lakh 50. The actual cost is 1 lakh 50. Step 4, do value engineering or value analysis to bridge the gap between the targeted cost and the actual cost. To bridge the gap between the targeted cost and the actual cost. So you will do some design changes. Go back to step 3. Go back to step 3. When you go back to step 3, see what is the actual cost again. Again you go back to step 4 if you are not meeting the target cost. In case a company is not able to bring the actual cost to the targeted level, they need not introduce the product. They can stop introducing the product. You will have to keep making multiple iteration of changes. You have to keep making multiple changes. Based on these changes, finally you should reach the target figure. If you are reaching the target figure, great. If you cannot reach the target figure, there is no point in introducing the product, because it will be a loss making product otherwise it will unnecessarily be a loss making product. In the industry, obviously there are going to be too much price wars and all will be there, so unnecessary challenges can come for the company. So they should look at ways of meeting the target cost. If they can reach that target cost, great, else there is no point in introducing these. Step 4 which I was saying is look for cost reduction. Whatever steps I talked about, they have, I think, expanded this to some 8-9 steps. Broadly the same points. Broadly the same points. When you are making design change, obviously please ensure that the initial functionality of the product is not compromised. If the functionality of the product is compromised, maybe you'll have to change the target selling price also. You may have to rework on the selling price, because if you're changing the functionality of the product, if the product cannot meet the requirements of the customer, obviously they'll not be ready to pay. So you may have to cut down on the price side as well. Structured approach determine the cost at which a new product of a specified functionality. In exam, please write this word, specified functionality, and quality must be produced to generate a desired level of profitability at the anticipated selling price. This target costing also validates the equation change. Earlier the equation was this: cost plus profit is equal to selling price. Now the equation is selling price minus profit is cost. The equation technically remains the same. So what is the big change? Earlier you were calculating cost, adding profit and fixing price. Now you fix price, deduct profit and get the target cost. Deduct the profit and get the target cost. Step 1, reorient culture of thinking and attitude. Importance to be given customer and market driven prices. So they are saying you will have to now change the culture, the way the organization operates, and now what they need to do is they need to start evaluating or work on market driven prices. You will have to work on market driven prices. You cannot go by the pricing methods like cost plus pricing, full cost pricing. All those methods will not work. You will have to go by competitive pricing or going rate pricing. Somewhere that culture change needs to happen at an organization ends. Second, understand what are the requirements of the customer regarding design, utility. Understand the requirements and then decide what is the target price. This was 1 step earlier. They broken it down into 3 steps. Establish the market driven target price. So first step is changing the culture of the organization. You will have to start focusing on customer and market driven prices and not work with your own methodology of cost plus pricing or full cost pricing, variable cost pricing, rate of return pricing. All those methodology will not work. Understand what is the customer requirements and then decide what can be the market price. If depending on the requirements, you may have to keep changing the price. Once the price is determined, you will have to now come to the profit angle. How much profit you want? I think they not only talk about profit, they're also talking about how much volume you need to sell. Determine the volume of the product, establish the target profit margin. They've given it a step 3A, 3B. I keep getting confused with these steps. I broadly told you the 4 steps, so maybe just be very clear on this. Maybe revise it day before exam. I don't know why they want to call it a step 3A, 3B. So within the target profit, they are breaking it down, saying that there is a volume of the product and there is a target profit margin. Based on this, you decide the target cost. Now, whatever target cost you have calculated, somewhere there should be a link. There should be a linkage between the target cost and the customer requirements. You cannot go. So indirectly what they're saying is basically this should be right. This should be right, because you want to give the best to the customer. You want to give the best to the customer. Today there is a product in the market which is sold at 100 rupees. You are giving increased functionality, so 100 has to go up to 110 or 120. You cannot keep working with 100. So there should be some amount of balance between the target cost and the customer requirements. If customer requirements go up, target cost also needs to go up. If customer requirements go up, target cost also needs to go up. I cannot work with the same target cost and you keep telling that customer wants free delivery, customer wants increased variety, customer wants increased functionality, customer wants free repairs, customer wants warranty repairs. All this I cannot keep giving. If you want me to give more and more requirements, meet more and more requirements, I need to balance between the target cost and customer requirement. Then establish the target costing process. What is the target costing process? Is what you have been doing. Getting into the target selling price, getting into the volume, getting into the profit, getting into the target cost. After this comes the most important part. Measure the actual cost, and then there will be a series of iteration which will be done. Series of design iteration will be done. Tata Nano would have gone through multiple iteration of design. Now, why are we learning this? Because I am not a technical person to recommend a design change. I am not a technical person to recommend any design change. In any target costing process to be implemented by an organization, there will be a team. This team will involve few people from R&D, few people from sales, few people from procurement, few people from production, and one person from the finance team, a cost and management accountant. His role is to validate everything on the financial side. If somebody says that this is the target selling price, he may have to validate this. He may have to even validate the target cost. Next, you'll have to calculate the actual cost, whose validation will be done by the cost and management accountant. So our role is more limited on the computation side, because we are not the technical person to recommend a design change. I cannot tell that you produce product like this, because we don't have that capability to make a recommendation. Brainstorm and analyze the alternative. Establish product cost model and compute the cost of the design. So brainstorm and analyze the alternatives. There is that cross map team which forms design from multiple departments which join together. They look at various alternatives by which the product can be manufactured, and for each of them you calculate the cost. So whatever cost you have calculated in 6A and whatever target cost you decided in step 4, there can be a gap. There can be a gap. Use value engineering or value analysis to close the gap between the target cost as per step 4 and the estimated cost as per step 6A. Again, I'm telling you, step numbering can be a challenge in exam, because they keep saying step 6A, 6B, 6B. So that can become a big challenge, because at least I didn't remember, I'm not able to recollect the exact step numbers. That is why I gave you a broad overview and I'm breaking it down. One is this: you also need to take care of your indirect cost. Taking care of indirect cost, not only the direct cost, you'll have to reduce the indirect cost as well. Re-engineer process and remove non-value added activities. Once this happened, you're able to bring down the cost within the said limit. You're able to bring down the cost within the said limit, introduce the product. After introduction, please do Kaizen costing on a continuous basis. Please do Kaizen costing on a continuous basis, because there will be a need for further cost reduction. There will be a need for further cost reduction. So measure results, maintain management focus on further possibility of cost reduction. So step 1, we said that I'll have to reorient the culture of the organization. After reorienting the culture of the organization, understand what customer wants. After understanding what customer really wants, you decide the market driven selling price. Then in 3A and 3B, I think we were calculating the volume and the profit which is needed, and then decide on a target cost. There should be a balance between the target cost and the customer requirements. I cannot keep increasing the requirements. If you keep increasing the requirements, obviously you will not be able to meet the target cost. You will not be in a position to meet the target cost. So there should be a proper balance between the target cost and the customer requirements. Validate them and ensure that there is a proper balance between these two items. Establish the target costing process, where you take people from multiple teams, they work together, look at various alternatives. You as a management accountant calculate the cost for them, see is there a gap. If there is a gap, there is a need to make design changes. You also need to reduce your indirect cost sides, basically eliminate non-value added activities, do a cost driver analysis, do an activity analysis, and do a performance analysis, and look at possibilities of further cost reduction. Okay, advantages of target costing. See, one is it reduces cost. That is one part. Proactive approach to cost management. What is the first step of target costing? Identifying a target selling price. So this can also indirectly contribute to market success or customer success. How does it contribute to market successes? Your base itself is customer. Your base itself is customer. I come out with an excellent product. Let's assume I come out with excellent classes for CA final. Something I do really well. I do a recording, everything I do. And I finally say the fees is 55,000 for one subject of CA final. Hardly I'll get students. I'll hardly get any students because I've not understood what is the price which students would be willing to pay. I have not understood what is the price which students would be willing to pay. Assume I say the price is 5,000, but I've ended up doing recording for some 500 hours. Again, students will not buy it. Students will not buy it because 500 hours is impossible for them to spend on a single subject. So you need to understand customer requirements properly, and target costing focuses on that. It focuses on customer requirements. It also focuses on the price, which is, so it focuses on the price and the quality aspect of the customer. It can even focus on delivery and support angle also, but majorly it focuses on this. So when it focuses on this, it will ensure that there is a success at the marketplace. There is a success at the marketplace. Just give me a minute. Yeah, focus on customer study and deciding the price which the customer would pay. Focusing on the customer study and deciding the price which the customer would pay. So this will contribute to market success. These two are the major parts. I'll keep talking about certain subparts from the subparts is minimizing non-value added activity. This is a subpart of cost reduction. Reinforces commitment from all for process and product innovation. Product innovation and process innovation is needed to again cut down on the cost side. You will need commitment from everyone in the organization. Commitment is needed from everyone in the organization for a company to have that cost reduction. Enhances employee awareness and empowerment. That is, you want something called as TEI, total employee involvement. So when you involve him, you also empower him by giving him certain duties as well as certain authorities given to this person. All this will net lead to a product which is of the required quality from a customer side at the required selling price. If these two happens, obviously students would be willing to. So if I am coming out with my classes which clearly tells that I am going to complete my classes in 160 170 hours, which is, I assume, my student requirement. Some requirements can be higher, some requirements can be lesser, but I understood the student requirements. I told them that this is the price at which I am going to provide my classes, or somewhere I was able to meet the requirements. Once I meet the requirements, it becomes a simple task. It becomes a simple task from a company point of view. Principles of target costing, broadly similar points. You start with the target selling price. Target selling price comes on the basis of customer. You establish a target costing process in an organization. When I establish a target costing process, I said I'll take one person from R&D, one person from production, one person from designing, one person from sales. So there will be a teamwork which is going to happen. These people together will focus on product design. These people together will focus on product design. In fact, one of the limitation of target costing is because you involve so many people, there's a possibility that if you remember in balance scorecard, under your internal business perspective, one of the area in few questions was reduce the time taken to introduce a new product. This was one of the points in many of the question. Why this point was considered is, if you reduce the time taken to introduce a new product, what will happen is, one, you are available in the market for a longer period of time. Second, it can help you in growing in that year. For example, ICI is coming out with your new syllabus. The moment new syllabus comes, let's assume this is not possible, let's assume they come out with new syllabus and in 5 days I announce my classes. In 5 days itself I announce my classes, saying that my classes are available, and assume no one else classes are there. I'll obviously have a competitive advantage. I'm going to have an advantage at that point of time, because the students at that time may be in need of classes and there is only one option, let's assume. So you get a competitive advantage. Now what you are doing is, your time for perfection, cost reduction. You kept on doing that in Tata Nano, and because of this the design went on for so long that you took a lot of time, and by that time student requirements itself changed. So it focuses on the stage of product design, reduces the cost of product life cycle, cost reduction across the entire life cycle. Life cycle is introduction, growth, maturity and decline, and attention to all stages of the value chain. Value chain stages is, there were primary activities and support activities. That was one way of doing it. Primary activities were material coming in, inbound logistics, operations, outbound logistics, marketing and sales and service. So I love to focus on all of this for cost reduction. Okay, what are the components of target costing? There are two major components, or three major components you can say. One is value analysis, second is value engineering, third you can even bring in a concept called as Kaizen costing, but Kaizen costing is mostly after the product is introduced. Value analysis is basically planned and scientific approach of cost reduction. Planned and scientific approach of cost reduction. What you do in value analysis is basically value engineering. What you do in value analysis is value engineering. What is value engineering is analyzing the various activities of a company, and eliminating items which do not add any value to the end customer. Reviews the material composition, production design, modification and improvement which do not add value to customer. I don't know, which do not reduce, which do not add value to customer. It should be which do not add value to customer. I'll have to eliminate those activities which do not add any value to the end customer. So if value addition is not there, it doesn't make any sense for an organization to have that activity. Value analysis and value engineering both are same. Again, I'm repeating, both are same. Value analysis will be more useful from a target costing point of view in case a company wants to re-evaluate the position of an existing product. Re-evaluate the position of an existing product, then you may go through value engineering. In case you want to re-evaluate the position of a existing product of a company. Clear? Any doubts on this? Now these are the some of the question you will ask yourself in value analysis. Can we eliminate some of the function? Reduce durability or reliability. Assume I introduce a mobile phone. I say that the mobile phone, even if it falls from 3 floors, it will not break. Because of this, you have to pay extra 1,000 rupees. Many customers will not pay. Because they'll say, I am ready to take this risk. A mobile phone falling from 3 floor, I don't expect it to be reliable at that time or durable at that time. Even if it falls, it's okay. Even if it breaks down, it's okay. Because those expectations, whereas a mobile phone, if it falls, I'm standing here and my mobile phone falls, and they say that in this fall nothing will happen to mobile phone, maybe I'll pay for that. I cannot say that my mobile phone is something which is almost unbreakable. Even if you put a hammer on top of it, it's not going to break. That kind of an expectation you're not going to have, because for that obviously the cost will be on the higher side. Cost will keep going up. So is there a possibility of reducing durability, reliability? We are trying to complete, let's assume Bharadwaj Institute says that I am going to cover only 80% syllabus, and we are going to charge a fees of XX. Some students would be okay with even 80% coverage. They say that I want only this much coverage, I am ready to pay this much fees. I am not expecting 100% coverage. That is where a lot of people have get into this crash courses or fast track courses where students are kind of saying that I don't have time at my end, you give me only 50% coverage, 70% coverage, 80% coverage. So mentality of people keep changing. So some students want that only, they don't want regular classes where detailed coverage is there. So is there a possibility of reducing durability, reducing reliability, minimizing the design, substituting the steps, combining the steps? You are buying, let's assume buying a watch. This watch has certain functionality. You need not, for example, I buy a watch, this watch can give me Indian time, it can give me US time, it can give me UK time. You will see these type of watches being there in companies where they try to work based on a US shift or a UK based shift, or maybe 3 clock could be there, one will show the Indian time, one will show the US time. But at my home I don't need this. At my home I really don't want to know what is the US time or what is the UK time. A single clock is going to show this and it will give me an extra cost. I'm not ready to pay for that. I'm not ready to pay for that extra cost which you are going to say because of this extra functionality which you are giving. For every functionality there should be a balance between the target cost and customer requirement. There should be a balance between the target cost and customer requirement. So in case you want to cut down on the cost, that is what they ended up doing. Okay, reduce durability. Can we eliminate some function? Remove one mirror, remove one wiper, do the interior simple, do the exterior simple, use plastic parts. Using plastic parts will reduce the durability or reliability, reducing the durability or reliability. So they ended up doing all those. So the point is, I want to reduce cost, so I'll look at certain ways of bringing down the cost. Kaizen costing versus value engineering. I would have talked about Kaizen costing earlier. Kaizen costing focuses on continuous improvement. Kaizen costing and value engineering does the same thing. Value engineering is one-time exercise. It's a one-time exercise. Kaizen costing is a continuous exercise. Because when you do it for the first time, value engineering may not uncover all possible cost saving. This example I gave you, when I took my first batch of CA final SCMP, when I prepared the material, I felt everything is excellently covered and I was very happy. But because ICI made changes, I also learned few things. And now if I look at the first material which I created and I give it to you and tell you prepare with that, many of you will even struggle scoring 40s out of that, because there are a lot of changes ICI has done. A lot of new things have been added. So I also need to keep making continuous improvement. I cannot keep saying that, okay, I have done one time, let's keep giving that to the students and let them prepare on their own. Let them struggle. I cannot do that. So you will have to keep finding out ways to reduce cost. Why is this needed? This is needed because if you follow a strategy called as cost leadership, a strategy called cost leadership, what happens? You are the market leader on the cost side. Unfortunately, it's easy to replicate a cost leadership strategy. This we learned in one of the case study in chapter 1, where we said that one of the limitation of cost leadership strategies, you bring down cost, competitor understands, he brings down cost. You press again, you reduce cost, he reduces cost. So you will keep trying to reduce cost. Reducing cost also reduces selling price. Okay, it's not only cost reduction, because he reduced cost, he reduced the price. You reduce cost, you reduce the price. So that's a price war which will keep happening. And if you have to remain profitable in this price war, there is a need to keep reducing the cost. Initial value engineering may not uncover all possible savings. Kaizen costing is repeating all value engineering till the product is produce. Value engineering identifies large saving. Kaizen identifies small savings. These small savings are critical to maintain target profit margin with continuous pressure on profit. There is always a pressure on realizations. Problem with target costing, I've already talked about. One important problem is the design period. It gets elongated. Sometimes also what will happen is, so many people are there, they'll fight. Because of the fight, they don't even arrive at a consensus on the design. Also, many times what happens is, there's something called as a proportionate cost reduction which organization do. What is proportionate cost reduction is, you did a cost analysis. You said initial costing is 100 rupees. You split this into process 1, process 2, process 3, process 4, process 5, process 6. This 100 has to be brought down to 80. One approach organization says everyone reduce 20%. Everyone reduce your cost by 20%. Every process. Some processes will find it extremely difficult to reduce cost because they are already at the most effective level or efficient level. They will find it difficult to reduce cost. So what can happen is, because of target costing, sometimes there can be finger pointing also. One department will say, why don't you reduce cost? Why are you pushing me to reduce the cost? So there can be some amount of issue among the various departments. Elongation of development process. Multiple design iterations are done till target cost is achieved. I want that number, I cannot be above that number. So till I achieve the target cost, I kept on changing the design, and that leads to challenge from a customer side. Large cost savings can result in finger pointing in various parts of the company. Multiple opinions about design can make it difficult to reduce the consensus about the design. Need for detailed cost data may reduce the quality due to usage of cheap component. Unfortunately, I think maybe this could have happened in Tata Nano side. Maybe this could have happened to some extent in Tata Nano side, or maybe if the quality is not low, but still the customers were not kind of happy with the product. That product did not succeed in the market. One way to eliminate all these issues is having a strong design team and a good leader. Having a strong design team and a good leader who can kind of manage all this, strong control over design team with a good team leader. He has to foresee all the steps, can kind of resolve all these issues which an organization has. This came in one of the exam question. What are the issues with target costing and how can you manage the same? Okay, impact of target costing on profitability. There are two-way impact on target costing. One-way impact, I think both way impact I've talked about. One-way impact is cost reduction will happen. Cost reduction will happen. Because of cost reduction, profitability improvement is going to happen for the company. There can be large savings in cost also. Second, it helps you in deciding the target selling price. When you get a target selling price, what indirectly happens is you fix the optimum price. Optimum price leads to maximum profits. Optimum price leads to maximum profits for the organization. We learned this in the pricing decision chapter. Ideally, these 2 points should be there. Yeah, detailed continued emphasis on product cost throughout the life cycle improves profitability through precise targeting of correct prices. Through precise targeting of correct prices at which the company can sell a profitable product in a robust manner. It's very critical that you get the right price. If you set a wrong price, obviously you are again going to fail in the marketplace. Okay, target costing versus traditional costing. Net difference is this. Okay, net difference is cost plus profit is equal to price. This is the traditional costing process. Selling price minus profit is cost. This is the target costing process. So what you do here is understand the product specification, that is understand the requirements of the customer, decide the price and volume, decide your profit, decide the target cost, and then look at the design. What you do in traditional costing is you understood the requirements of the customer, you prepared a design, estimated the cost, added the profit, and set the price to the customer. So focus design will happen here. Based on that, you calculate the cost, add a profit, and then fix the price. Earlier, target costing, what happens is understand the requirement. Look at what design can meet this requirement. Look at how much will be the cost for that. Compare it with look at the target price. Based on the design, look at the price, compare the profit, get the target cost, and then you can compare the actual cost and then keep making the changes. All this you can keep trying to do. So in a practical world, there's also a interlinkage of product specification and product design. There could be an interlinkage. Both can even happen parallelly. Understand customer requirements. Look at what is the selling price you can sell it. Look at the price, get the target cost, prepare the design, see whether you are meeting the cost, do cost reduction. Here, understand the customer requirement, prepare the design. Based on the design, you calculate the cost, add profit, and fix the selling price. Net gap is cost is calculated, profit is added, selling price is fixed. Selling price is calculated or ascertained, profit is ascertained, and target cost is calculated. Where do I follow target costing? Target costing is basically followed in those places where major chunk of the cost can get locked in at the design stage. Major chunk of the cost can get locked in. Locked in is, that is based on the design, your cost is almost fixed. Based on the design, the cost is almost fixed. This is true for most of the manufacturing companies and hardly for few services. So target costing will again be useful more from a manufacturing company point of view and less useful from a service company point of view. Majority costs are locked in at the design phase. Locked in does not mean you have incurred the cost. Locked in means Once based on this design, you can say this will be the cost. Obviously, in practical world, some increase decrease can keep happening. Mostly useful for manufacturing companies and few service industry. These are some of the examples of companies which can benefit from target costing. Mostly manufacturing based companies, assembly oriented industries, automation kind of companies, companies which have shorter product life cycle, companies which have implemented management models like just in time or value engineering. All these type of companies can follow target costing. In simple words, you can follow this if you're mostly a manufacturing kind of a company where cost can get locked in. If you're an automation kind of a company, your cost will get locked in mostly at the design phase because no major changes in the cost side will happen. If you are an assembly oriented company, what is assembly oriented companies? The major chunk of their cost is they will have certain parts which are manufactured, they assemble them together. So major chunk of the cost will get blocked in at the design stage, various components, and then you assemble them together. Shorter product life cycle is those products which will go out of the market at a shorter gap. I don't know, the solution talks about shorter product life cycle is less than 8 years. I thought that itself is long years only. 8 years itself to me look like a longer product life cycle, but I think the detailed theory does talk about a life cycle of 8 years. This chapter alone, please do not this chapter. I don't know, I may not reiterated it multiple times, but I'm telling this now. All chapters do read the detailed theory. In the initial chapters, I would have told about it, but later on, I would not have told it. So do give a reading of, and I hope by this time the recording is over. Audio recording over, not over for all chapters. Completed, not completed. How many have not completed? Be honest. 1, 2, 3, 4. Okay, almost all of you have not completed. I think except for few. Please complete the recording. Have you started hearing the recording? I at least believe it will help you in recollecting the theory. If it doesn't help, then you stop it. It's not that I'm pushing it onto you, but if it starts helping you, whoever starts hearing it, at least helped me really a lot when I did my a paper called Information Systems Control and Audit, which is like your EISSM. That paper, I could crack it only by hearing my audio multiple times. Again, I'm repeating, please do this because I'm almost come to the end of your classes. In a week's time, the classes will get over. So that is where I want you to be very clear on this area. That theory is extremely critical. In one of the recent attempts, 60-65% was from theory. That much I don't see theory getting tested, but 50% is obvious. 50% is basically 60 marks. 60 marks of theory, 60 or 65 marks of theory, and 60 or 65 marks of practical. 125 marks is your paper. 125 marks of your paper. So obviously that would be split in the exam. I'll go to the next segment, which is called life cycle costing. Okay, let's come to life cycle costing. Now, what are we going to learn in life cycle costing? Is a product goes through multiple stages. A product goes through multiple stages. There is a introduction stage, there's a growth stage, maturity stage, and decline stage. The characteristics of the market will undergo changes as you go through different stages. When I say characteristics, the pricing, the competition angle, the demand of the product, the cost structure of the product, all this may undergo changes. So under the introduction stage, the pricing could be slightly different. Growth stage, you may have to make changes. Maturity stage, you'll have to make changes. Decline stage, you'll have to make changes. So there can be changes on the price side. There can be changes on the cost side. There can be changes on the competition angle. There can be changes on the demand in the market. There can also be changes on your advertising strategy. So the strategy and the characteristics undergo changes across stages. Also, the profit which you earn during each of the stages will also be different. There are certain stages where you may not earn any money. There are certain stages where you may not earn any money. Example, most of the times in introduction phase, you may be having losses. Most of the times in introduction phase, a company can have losses. What life cycle costing says is that you should try to predict the entire volume. You should try to predict the entire volume of business throughout the life cycle. Entire volume of business throughout the life cycle of the product, and take decision take decision based on the overall profitability of the product, based on the overall profitability. So it's an approach to measure and estimate the cost and revenues throughout the life cycle of the product, throughout the life cycle of the product. When you do this, you'll be able to understand whether the product is overall profitable or not. That's one thing. Life cycle costing will also guide an organization in strategy implementation. It will help an organization in knowing what needs to be done at different stages, because different stages your strategies will change. For example, in introduction stage, my focus could be on doing a lot of advertising, ensuring that my product is available to the end customer, so I may focus more on supply chain and distribution. Maybe in the maturity and decline stage, I'll focus more on cost reduction, because that stage my product is well known in the market, so doing advertising will not help. Doing advertising is not going to help at that stage. Also, my product could be available in many stores, so maybe the focus area will undergo changes. So the strategy implementation can undergo changes based on the market situation. Based on the market situation, you can bring about a change in the strategy of the company. Identifying cost and revenues over a product life. Objective is to maximize profits generated over the entire life cycle. You have 4 stages: introduction, growth, maturity and decline. In the introduction stage, this is the first stage. You are introducing a new product. Just give me a minute. Let me comment on all of this. In the introduction stage, the price can be very high or very low depending on whether you are following a skimming or penetration. Whether you are following a skimming or penetration, so this can be high or low. Cost will be high per unit. Cost will be high per unit. The reason for this being high per unit is, what will happen is, you will have very lesser volume. Initially, the units which you sell could be on the lower side. When that happens, indirectly you will not get the benefits of economies of scale. Benefits of economies of scale will not be there, so automatically the cost would be on the higher side. Sales, mostly low volumes. Volumes will be on the lower side. Competition, negligible. It may not be even there. Competition may not be even there in this situation. Marketing expenditure could be huge. Marketing expenditure could be huge, and mostly you'll have negative profits. Mostly there will be negative profit. This is your first stage. In the first stage, this will happen. Then growth, maturity and decline. How the price will move, it will keep reducing or it will keep increasing depending on what strategy you had followed. If you had followed a skimming strategy, you will reduce the price. Maybe at maturity level, it kind of stabilizes. Decline stage, you may have to further reduce it if needed. If it's penetration stage, you will increase it. Maturity stage, it will stabilize. Decline stage, price will fall only. Both the market price is going to fall. So this can increase, decrease, stabilize and decrease. Stabilize and decrease. When it comes to cost, it will mostly decrease. Why cost will decrease is, under this stage, volumes have started picking up. Volumes have started picking up. When volume started picking up, indirectly the company is going to save on the cost side. When the volumes are picking up, you will end up saving on the cost side. Earlier, 10 lakh rupees of cost was divided by 1000 units fixed. Now 10 lakh rupees of cost will be divided by 5000 units. So automatically the decrease will happen. Mostly further reduction may not happen. Stabilize. Cost can go up also, because your volumes will start coming down. Volumes will start coming down. It can go up or it can remain at similar levels. Rapid increase. There will be a rapid increase in sales for the company. This is the stage where people will start buying in. There is going to be a rapid increase in the sales. Increase at decreasing rate. It will keep going up, but it will increase at a rate. Earlier it was increasing at 20%, 25%. Now it will increase at 15%, then at maybe 10%, then at 5%, then at 2%, then at 1%, and you reach the negative stage or the decline in sales. Decline in sales. From a competition level, increasing. Highest competition could be there at this stage. Very few. At this stage, people will move out. People will start moving out of that product. Others will also start moving out. You will also start moving out. So very few competition would be there at this stage. Marketing can continue. Stabilize. Eliminate. There's no point in doing advertising at this stage. There's no point in doing the advertising at the decline phase. So at the decline phase, you may want to bring down the extent of advertising which you are doing. Profit scenario, I think higher profits, this can give highest profit, or it can be vice versa also. The growth can give you highest profit, this can give you higher profit. Profit will start falling, it can even get into loss. Profit will start falling and can even get into losses for the company. So these are the stages which are there from a product stage, from a product life cycle point of view, and this is what will happen at across different stages. This is there in the PPT, this is there in your PPT. I'll just talk about this. First stage, new product is launched, minimal awareness and acceptance, negligible competition and non-existent profit. Second stage, expansion of sales, entry of competition leading to decline in profits around end of stage. Competition angle started coming in. Sales continue to increase but at a decreasing rate. Intense price competition will lead to decline in profit. Players have started planning for a new product. Decline in volume, demand for the product disappears. Availability of better and lesser costly substitutes in the market. This is what I was saying about introduction, growth, maturity and decline. Objective of the introduction stages, create product awareness. I want customers to come and try my product. I just want customers to come and try my product. I want to tell them that I have a product like this, please come and try it. So there are a lot of companies which also send trial pack. They say that we are going to give trial pack. Bharadwaj Institute does it. We give our videos, some sample videos are given, because we want people to, it's not technically we are in introduction phase, but technically you want people to first feel the product. So in the growth stage, you want to maximize your market share, because there is significant rapid growth which is happening. One challenge you will face in exam is growth and maturity many times can be swapped also. The objective can be swapped, the cost structure can be swapped, because it's a very the only from a practical point of view, I can say the clear way of finding what is mature and what is growth is if your product is growing at a rapid rate. Decline maturity stages when the growth stabilizes at some level. So there are certain products which will only grow at 5%, and it's a mature market, it's not even a decline market, it will continue growing at 5%. For example, your FMCG products, the consumption of whatever your cosmetics and other product, they'll keep growing based on the population growth. They'll keep growing. It's not that individuals will start consuming more and all, that and all will not happen. It'll keep growing at a rapid pace, it'll keep growing at a steady pace. When you come out with a new product, maybe you grow at a rapid pace, but after a point you will grow only at a steady pace. So maximize profits while defending the market share. You want to maximize your profits, but you also want to defend the market share. Reduce expenditure and milk the brand. That is, try to focus on your brand loyalty and get sales from the customer. Don't try to spend more on the product side. Don't try to spend more. Sales, low sales, rapidly rising, peak sales, declining sales. This is what I was saying. Low, then there is a rapid increase, then you have reached the peak, then declining. High cost per customer, you end up spending more. Cost comes down. Ideally both should be almost similar. Low cost per customer, this can even end up going high cost also. Last stage can even end up becoming high cost per customer. Why will it become high cost per customer? Is because you will lose the benefits of economies of scale. You lose the benefits. Earlier you were buying 5 lakh units of raw material. Supplier was giving at 20 rupees. Now you are saying you will buy only 1 lakh units of raw material. He'll say you'll have to buy at 22 or 23. So economies of scale benefits come down. Economies of scale benefits coming down will also have an impact on the fixed cost side. Profits negative, rising, highest profits declining or can become negative also. Declining or can become negative. Customers, the introduction stage, there are very few people who would like to try a product at the introduction phase. These people are called innovators. These people are called innovators, or these are the set of people whom the organization depends on, that there will be set of people who would try to experiment. There are people who are ready to experiment. There are people who would not experiment with anything. For example, you plan to buy a laptop and there's a new brand which has come in. Many people may not want to try out a new brand, then you are not innovating. You are not ready to do any experimentation. As a customer, you want to either be a middle majority or an early adopter. Early adopter is basically people who comes later, the innovators. Once these people start using it, others start coming in. Laggards are the last set of people when the product is almost non-existent. At that stage, they want to try out using this product. Competition, few, growing number, steady number beginning to decline, and declining number, or it can even become zero. It can technically end up becoming zero. These are the characteristics at different stages. Strategies at different stages. My strategy will also keep changing at different stages. Strategy will be different from a product point of view, from a price point of view, from price, advertising, distribution, sales, promotion. Let me talk advertising and sales promotion together first. Initially, you will have to do huge advertising. You will have to do huge advertising, build product awareness amongst early adopters and dealers, use heavy sales promotion to enter trial market. Then you may continue to spend a little bit more on advertising. You may continue to spend on the advertising because you want to reach the mass market. You want to end up reaching the mass market. Here onwards, your advertising will keep coming down. Stress on brand differences and benefits, reduce level to keep hardcore loyalty. I don't want to spend more on the branding side because I'm not going to get any new customers now. There's no point in spending on the advertising at the decline phase. If you spend on advertising at the decline phase, you'll only incur costs, you'll not get any benefit out of it. Sales promotion is more or less similar to this. Reduce to take advantage of heavy consumer demand, increase to ensure brand switching, reduce to minimal level. Again, I'm repeating, these two can be swapped here and there. There is a possibility of swapping your characteristics and strategies between the growth and the maturity. In fact, there is a 12-mark exam case study which came where they told you to do a mapping of the strategies and characteristics with the stage. I tried doing it for the first time. I got 8 out of 12 because 4 I could not get as per ICA because there will be a lot of confusion between the growth and maturity. What you think as growth can become maturity. What you think as maturity can become growth. Can't help it. That's a challenge which will always be there. Distribution is one most important part. What will happen is I come out with the best possible product. You go to the retail store. Ask, do you have XX product? He says no. You go to another retail store, you ask for the same product because I'm doing so much advertising, but you're not finding that product in your place. You tried 1 kilometer. Beyond that, you're not going to try anything, saying that the product is not available. I'm not going to get into keep searching for this product. So one good part which has happened is because of online sales and other things, the market has expanded for the sellers. But the point is still, there are people who wouldn't want to buy into the online mode. They would want to touch and feel the product. First time you're buying, you may want to touch and feel the product and then buy. So it's necessary that you keep building on the distribution side. So keep increasing the distribution and then finally remove the distribution part, or finally eliminate those unprofitable levels. Pricing will differ. Okay, whatever you see is the penetration pricing. If you have a skimming pricing, just give me. Okay, the strategy can change based on the penetration or skimming. Penetration low price and keep increasing, skimming high price and keep decreasing. So this is high price, cost plus profit, technically, because cost will be on the higher side. Price to penetrate market, you're reducing the price. So technically the strategy given is here for the skimming pricing strategy. Cost plus profit, price to penetrate, price to match, you keep reducing it, and then last stage anyway reduction will only happen. Last stage reduction. If it was penetration strategy, low price, increase or increase and stabilize, and then anyway last stage is decrease. Product, offer a basic product. Initially I want people to test my product, so I'll provide a basic product. Competition is not there. Beyond that, I'll have to keep spending on adding new features, new quality, enhance reliability, enhance durability. All that you'll have to keep doing. Offer product extension, services and warranty. Diversify brands and models. They'll keep coming out with variants. The companies will keep coming out with variants. Last stage, please eliminate the item. There's no point in trying to do much beyond this. Okay, characteristics of product life cycle. How does a product life cycle help an organization? What product life cycle basically is trying to tell is that every product will go through different stages. Every product will go through different stages, and for each of the stages it is possible to predict. It is possible to predict the demand, cost and sales pattern. It is possible to predict the demand, cost and sales patterns of the product. This will help an organization in developing appropriate strategies. Also, the focus area could be different at different levels. In the introduction phase, my focus is on building distribution. In the decline stage, my focus is on cost reduction. In the introduction stage, my focus could be on huge advertising. My focus is on huge advertising. In the maturity stage, my focus is on providing or enhancing, providing extra features. The growth and the maturity phase, providing extra features so that people are able to differentiate my product from others in the market. Products pass through 4 stages. Product cost, revenue and profit follow predictable course, predictable pattern as you pass through PLC. This predictable pattern would be very critical from a strategy implementation point of view. What works for introduction phase, if you do it in the decline phase, business will fail. What you should do in introduction phase, if you are doing it in the decline phase, because in the introduction phase you don't want to do advertising, that's the strategy. In the decline phase you are not doing advertising, you'll only fail. If you reach the decline stage and keep doing advertising saying that I want to increase sale, nothing will happen, because there's no point in. Profit per unit varies as product passes through these stages. Strategy has to be different. Strategy has to be different as the product gets exposed to different opportunities and threat. Functional emphasis is different. Focus is on R&D during development stage, cost reduction during decline stage. One of the most important part for an organization is this. This is what you do in growth and maturity phase. Either find new application of the product or find new users of the product. New application, the existing customer should use it for 3-4 reasons. If he uses it for 3-4 reasons, his consumption will go up. Or whatever application your product has, you should find new users. You should end up finding new users. If you do this, the life cycle will keep going up. The life cycle will keep going up because you will keep staying in the growth or the maturity phase. You will not reach the decline phase of the product life cycle. Okay, benefits of PLC. How does a PLC help an organization? It is, again, when I did target costing, I was saying that target costing helps you in finding out a target price for a product, which indirectly will help you in customer success or the market success. How does it help in customer success or the market success? You are fixing the right price. You are fixing the right price from a market point of view. That is what the approach was saying. Fixing the right price from the market point of view will ensure that you get success at the marketplace. Now, coming to product life cycle, what it can help us in doing is, one, you prepare a right strategy. When you prepare a right strategy, what will happen? You will get success at each of the stages. You will end up getting success at each of the stages. It can also help you in predicting the demand pattern. It can help you in predicting the demand pattern for an organization. Prediction of demand pattern will help you in doing other planning exercise, the resource planning and other things which an organization needs to do. It can also help you in deciding your advertising strategy, the distribution strategy, how you want to distribute the product, when you want to expand distribution, when you want to cut down on the distribution, when you want to do more sales promotion, when you want to cut down on the sales promotion, when you want to spend on advertising, when you want to reduce on advertising. Early action to generate revenues are lower cost. Better decision at each stage. Every stage, first stage I'm focusing on advertising. Second stage I'm focusing on enhancing product application. Third stage I'm focusing on, second stage bringing new users. Third stage is bringing new application. Fourth stage is I'm focusing on cost reduction. Promotes long-term rewarding. Long-term rewarding is because you look at the entire life cycle, you don't take a short-term call. Because what will happen most of the times, first stage loss making. First stage is going to be loss making. So if you go by first stage and decide product is not to be introduced, you will end up taking a wrong decision. Long-term picture of product line profitability. Long-term picture of your product line profitability. Considers cost over entire life cycle. When you consider cost over the entire life cycle at the stage 1, before the product is introduced itself, you look at, are there ways to cut down the cost, or are there ways to implement target costing or value analysis or value engineering, or do continuous Kaizen costing. Okay, the benefits of PLC is, one, uses of PLC. There are 3 uses of PLC. One, it is a forecasting tool. It is a forecasting tool. What is a forecasting tool? It will help you in forecasting the demand of the product. It will help you in forecasting the demand of the product over the different stages of product life cycle. But sometimes it can become very tricky also, demand prediction. So it's a forecasting tool. This is not much useful. Okay, just give me a minute. Okay, I'll just maybe explain again. Forecasting tool is basically forecasting of the demand and sales pattern across the entire life cycle. But I think they are bringing about another element, saying that if it's a new product, if it's a new product, these products can exhibit diverse sales pattern and may not be that much useful. I think the solution or the initial theory also talks about that. Once it's a new product, you may have to look at similar products. You may have to look at the similar products which you have introduced in the past, and based on that you do a demand prediction. Second is control tool, is measure the performance of this product against the similar products launched in the past. Again, this may not be useful if you do not have any similar products which are launched in the past, because this is a new product. If you had similar products in the past, for example, the Maruti cars or any automobile manufacturer, they can keep comparing the performance with the earlier models which have been introduced by them. By that way, they'll be able to look at the performance. Planning tool is, again, I'll get to know what are the challenges I'm going to face at each stage. So depending on that, I may focus on marketing at some time, I may focus on cost reduction at some time, I may focus on enhancing product application at some time, I may focus on increasing the number of users at some time. So there are three tools. There is a planning tool, there is a control tool, and forecasting tool. According to me, all the three are useful, but I think the solution talks about forecasting tool to be not that much useful, because sales may have diverse sales pattern, and because of that prediction may not be possible. If you say that prediction may not be possible, then life cycle costing itself becomes a question mark, because life cycle costing needs you to predict the cost and sales over the entire life cycle, and based on that only you can prepare your strategies. Move to the next segment, which is called Pareto's analysis. I'll first discuss about what we do in Pareto's analysis, and then let's discuss the PPT and then do some questions on that. Pareto's analysis is basically an exercise in selective control. It's basically an exercise in selective control. I have 100 things to worry about. Let's assume I cannot do much about 100 things. I'll have to prioritize and focus on few things. Let's assume you have 100 things which are pending. You need to focus, prioritize, and work on few things. So it's an exercise in selective control. It can also be called as ABC analysis, which you could have seen at CA Inter. ABC analysis is basically categorizing your product into category A, category B, category C. Unfortunately, Pareto's analysis is something which should be done for a lot other things. Unfortunately, students end up doing it in their preparation. I'm totally against it, saying that you want to focus on category A chapters, category B chapters. You do your own categorization. Doing a selective preparation and all will not help from an exam point of view. So this is an exercise for selective control. For example, a company has 20 products. Now, Reliance has so many businesses. Mukesh Ambani is not going to take care of every business, and every decision he is not going to take care. He will focus on those businesses which contribute significantly. I don't remember the country, but in one country, one economist made a conclusion saying that, which is true even for our country to a great extent, 80% of income tax or wealth of a country is from 20% of the people. So in case you want to improve your tax efficiency, if you can take care of the proper assessment of these 20% assessees, automatically your tax collection will start going up. Automatically the tax collection will improve in case you can take care of the 20% of the assessees. If you take care of the 20% of the assessees, 80% of the income tax collection will improve, or 80% of the wealth is concentrated among the 20% of the people, which is the case with most of the countries. Even in India, if you see the top 10-20% will have a significant proportion of the overall wealth, and that is how the scenario is. So if I can use my Pareto's analysis for customer profitability analysis, how it is used for customer profitability analysis, 80% of the profits would be contributed by 20% of the customers. I can use it in activity based costing. How? 80% of the cost would be driven by 20% of the cost drivers. You can use it for product pricing. 80% of revenues would come from 20% of the product. So it has application across different places, and selective control would be needed. For example, this is not a selective control, but when you go for your audit, You do vouching, you do a sample verification. You don't end up doing the verification of all transactions. Most of the audit firms get into a sample verification, and when you select a sample, maybe you try to select a sample in a random manner. Sometimes you may try to select sample in such a manner that all different types of transactions are covered, but whatever way you want to do it. But net there is a need for selective control at few places. There is a need for selective control at few places, and that is where that ABC analysis was done. Where is category A, category B, category C? Category A product, MD will take care, managing director will take care. Category B product, maybe the production director takes care, or the person who is below the MD. Category C would be given to the lower level of management. If I say a product is going to give 5 crore profits, it may not matter much to Mukesh Ambani. He is not going to control that, or he is not going to try to take any decision. But same at a lower level, at the lower segment, there's a business which is contributing 5 crore. He will take a lot of interest in managing that business. He will take a lot of interest in managing that business or ensuring the success of that business. So depending on the layer, you allocate the products. So similarly, an organization may want to know which are the most important problem. For example, you can have defects, and when you have defects, you can say 80% of the defects are caused by 20% of the reason. The reason would be the same for 80% of the defect. So if you can rectify this, see, getting into perfection may or may not be possible, but if you can cut down on the most important issues, automatically results will start coming in. That is what Pareto's analysis is all about. Tool to focus on most important aspects of decision making. It is based on 80-20 rule or 70-30 rule. Mostly 80-20 is what we say. 70-30 is basically 30% of the 70% of the defects are caused by 30% of the problems. 70% of the profits is by 30% of the customer. So instead of 80-20, I will say 70 and 30. Helps in directing management attention to key control or planning aspect. I want to focus only on the most important issues. Don't tell me to focus on everything, because I cannot focus on all the issues. If I end up focusing on all the issues, net will not get any results. Uses is, the major uses is prioritization. This is also seen as a disadvantage later on. Why this becomes a disadvantage is when you start prioritizing the important problem, maybe you may miss out on some other critical problem also. There could be some other critical problem which could be in the next 20%, but that's a extremely critical problem, and that can lead to huge challenges later on. So that's a disadvantage. We'll discuss about advantage and disadvantage later on. Prioritizes problems, goals and objectives to identify root cause. Selection of key quality improvement program. Quality improvement program is how this is from a defect point of view. If this point is, if you are doing a Pareto's analysis on the defects of the company or on the rejections of the product. Key customer relationships and service program. This is from the point of view customer profitability. Get to know who are the most important customers. Key employee relationship improvement program. Key performance improvement program. And this is what application I was talking about. Pricing of product, customer profitability analysis, ABC analysis, quality control, activity based costing. You are going to use it at all these places to ensure that there is a selective control. There is a selective control. Selective control is very critical. It's very critical. Again, I'm repeating, it's not needed for your preparation. Many students get into all that selective preparation. If your luck is good, great. If luck is not good, then nothing can be done. So that is beyond control. So do your preparation at a full-fledged manner. There's no concept of selective preparation. Few chapters you may pay more attention, few chapters lesser attention. That you can do, but ignoring something is not advisable. Pros and cons of Pareto's analysis. The major thing is it helps you in prioritizing the important issues. So it gives me a direction or a guidance as to what I need to do. Breaks big problem into smaller pieces by looking at the root cause. Prioritizes the focus area. Prioritizes the focus area. When you prioritize the focus area, what happens is Mukesh Ambani can work for 12 hours a day or 10 hours a day. So he has that much time only. So that's a scarce resource, because the amount of business he has, the multiple segments in which he is operating, he cannot control the entire operation. So you want optimal use of his time. You want optimal use of his time. That optimal usage can happen only when he focuses on the important level issues. Your audit partner is not going to get into vouching. He is not going to get into vouching. He will come on the last day of the audit. You would have been done with your report, your senior would have verified the report, the manager would have verified the report, and then you would have gone there. He will discuss few important points and then close the audit. He's not going to get into the base level analysis because it's not possible, because you want to do an optimum utilization of his time. At your end, you are able to do, because that is also optimum utilization of your time. At your level also, you are doing an optimum utilization because you can focus on these things. You are not being asked to vouch all transaction. If you are asked to vouch all transaction, your time is also getting indirectly wasted. If you are doing a physical verification, sometimes you do a sample verification, sometimes you do a total verification, depending on the risk which is there. But many a times there are places where selective control is employed. So prioritization will lead to optimal usage, and this is a control mechanism. The disadvantage which I talked about is possibility of exclusion of important problem. Possibility of exclusion of important problem. Maybe it's that in the later 20%. Also, when you want to identify the problems, we did one question on Six Sigma where there were product returns coming up, and they had captured a table saying that the reason for the return and the percentage of respondent or percentage of times that was happening. But we were not able to finally get the root cause as to what is happening. Is it the manufacturing team issue? Is it the marketing team issue in that case study? Manufacturing, marketing, all those issues we were not able to get into it. So unless I have correct data or information, this will not work. If I'm starting with wrong data and doing a Pareto's analysis, nothing is going to work. If defect has happened because of X reason, your data is written it as Y, you will obviously choose a wrong priority area. You will end up choosing a wrong priority area, and wrong identification of priority area will lead to huge challenges from a company point of view, because if you are not focusing on the right issues, obviously results will not come. Clear? Okay, let's look into a few problems. Good morning, friends. Okay, let's go to the last area of chapter 4, which is on environmental management accounting. As such, chapter 4 has come multiple times in exam. In that, I think EMA question has come twice or thrice for 20 marks till now. So alternate attempts or 1 in 3 attempts, you get a 20 mark question. Else there are 10 mark questions and 5 mark questions which have come continuously from this area. The reason for this is also because from a practical point of view, this becomes very critical, looking at the current situation or looking at the focus of the various organizations on the environment side. Now EMA is basically an extension also of TBL framework. Under triple bottom line framework, we felt we had seen that an organization need to focus on 3 areas. What are the 3 areas we saw in TBL? Environmental, social and economic, or people, planet and profit. So environmental management accounting focuses on the planet side. Environment management accounting focuses on the planet side. EMA is the process of collection and analysis of information relating to environmental cost for internal decision making. There are 2 major types of environmental cost. One is called internal cost and second is called external cost. There are other categorization, but this is one major category. Internal costs are those which are reflected in my financial statements. External costs are those which are not reflected in my financial statements. For example, I use a 2-wheeler. For that, I'll have to incur something on maintenance, something on fuel. All that is part of my expenses, and if I am preparing my financial statements, it will reflect in my financial statements. But when I'm using the 2-wheeler, I'm also causing harm to the environment. I'm causing harm to the environment, which will not be reflected in my financial statements. These are called external costs. These are called external costs. Some of them may be difficult to even quantify. Now, 2-wheeler was a very simple example. Let's assume you are into ready-made garment industry or cotton processing industry. In the cotton processing or in the ready-made garment industry, when you need to make a shirt or a trouser, the process goes through multiple stages. You start with something called as a raw cotton and it goes on like that. There's a process called dyeing. In dyeing process, what happens is you put a required color. So there are different shades of color you need from a fabric. So that color is attached in the dyeing process. In that dyeing process, a lot of chemicals get created. lot of chemicals get created. Earlier what organizations were doing is these chemicals were released in open water. They were releasing it in what some rivers, they were releasing it, or they were releasing it outside. Now this was causing harm to the environment and to a lot of people who are there. Now what EMA is doing, or what organizations are also increasingly doing, is they are trying to convert the external cost into an internal cost. They are trying to convert the external cost into an internal cost. Now what used to happen is, because you were doing this, it was causing harm to the environment, certain norms came in where it was necessary that an organization needs to treat these effluents, they were called effluents, before they're released in the open water, or before they're released into the environment. So this was again a costly process for a lot of organizations, because you need to have certain machineries to treat them, but organizations were forced to do that. Organizations, so whatever was impacting the environment and not impacting the company's financial statement, that external cost got converted into an internal cost. Now also there are certain products which may impact environment significantly. Certain products are not going to impact the environment significantly. Products which impact environment significantly will have an associated cost called as environmental cost. These costs needs to be passed on to the product properly, and after passing on to the product properly, you ascertain the profitability of the product. Why is this needed is, if you don't consider environmental cost into the decision making process, internal cost will obviously be considered, but somewhere you will have to consider the impact of the external cost also before you decide on. Given a choice, there are customers, there is a segment of customers who are ready to pay a small premium for an environment friendly product, or if two products are of similar value, they will prefer a product which is more environment friendly. So what EMA is saying is, the focus of EMA is first finding out what is the environmental cost. There are three stages of this. First, you'll have to identify the environmental cost, then allocate this environment cost to the end product using maybe an activity based costing, and third stage is using it for the purpose of reduction, decision making, and other allied areas. So that is what environmental management accounting process of collection and analysis. First get the information and then use it for the purpose of decision making. Integrating management accounting is decision making with environmental management accounting. Identifies environmental related costs and seeks to control these costs. Many areas we saw that an organization would want to be sustainable. Sustainable is profitable for a longer term. Sustainable is they are able to sustain their operations or maintain their operations for a longer period. Now in order to do sustainability or environmental efficiency, it's critical that an organization focuses on this area. Now EMA can be used for multiple areas. It can be used for product pricing, budgeting, investment appraisal, calculating costs, measuring savings of environmental related projects. I think in Jan 2021 an exam question came which focused on entire theory of EMA. There was a case study, but the focus was entire theory of EMA, a 20-mark question. In that, at least 12 to 14 marks was a direct theory question. Nothing much was to be taken. So this was one of the area. What are the areas of application of environmental management accounting? This became one theory question for 2-3 marks. Now next area is classification of environmental costs. There are multiple way of classifying it. One is called generic classification, a practical classification, US based classification, United Nations based classification. So there are multiple ways of classifying the environmental cost. The first is US Environmental Protection Agency classification. Now they classify the environmental cost into 4 categories. The first cost is conventional cost. This is easy to identify. They are basically raw material and energy cost. Example, if you are manufacturing, let's assume tiles. When you manufacture tiles, you will need a lot of power consumption. So that will form part of environmental cost. This power could be a renewable source of power, could be a non-renewable source of power. If it's a non-renewable source of power, if you are using coal to generate power and using it for this, or whatever power you are getting that has come from coal, indirectly it will impact the environment. Indirectly it's going to impact the environmental. So first part is raw material and energy cost. The second category is hidden cost. What is hidden cost is, these are environmental costs. For example, petrol and diesel cost. Now petrol and diesel cost is basically an environment related cost, but in your books of accounts it may come under the category of transportation cost, or it may come under the category of travel expenses. So these are environmental costs but are hidden as overheads, Third is contingent costs. Contingent costs are those costs which you are likely to incur at a future date, most probably once that product life cycle is over. This product would have caused a lot of harm to the environment. You may have to incur certain cleanup cost, or some disposal cost, or some decommissioning cost. These terms you could have come across when I would have done product life cycle. There was one problem on product life cycle where they said that instead of saying the stages as introduction, growth, maturity and decline, we can say design, manufacturing, operation, and the last stage, which is the disposal stage. So in that stage you will incur these type of cost. And relationship costs are basically the intangible costs. What are intangible costs? Is there are certain costs you will have to incur to prepare environmental reports. You're going to see a classification called as prevention, appraisal, internal failure, external failure later on. So these costs need to be prepared in a report called as like cost of quality report. I'll prepare an environmental cost report. There is a cost incurred for that, preparing a report. That is also called as environment related cost. The second category is by UN. First was by US. The second is by United Nations classification. Here I think you have two category of cost. Cost incurred to protect environment, cost of wasted material, capital and labor. Now the next category you are going to see, this is basically prevention plus appraisal, or cost of conformance. This is basically prevention plus appraisal, or technically cost of conformance. You're going to see the next category, which is I think Hansen and Mendoza classification, or I think the other name is practical classification. There you will see that the four categories: environmental prevention, environmental appraisal, environmental internal failure, environmental external failure. Now that category and this category can be mapped. This is prevention plus appraisal. This is internal failure plus external failure. This is internal failure plus external failure. Cost of wasted material, capital and labor is basically failure related cost, and cost incurred to protect the environment. Yeah, Hansen and Mendoza classification. Prevention costs, I am not explaining much, you know what needs to be done. Prevention costs are those costs which are incurred to ensure that adverse environmental impact does not happen. Example, I am providing training to my employees. Another example, I am getting a machinery which is more environment friendly. I am buying a machinery which is more environment friendly, or I'm manufacturing those products which are environment friendly. So you are ensuring that the environmental impact itself does not happen. Appraisal cost is cost incurred to check whether any environmental impact is getting created. There are certain tests called as contamination test which you do in order to check this. You have contamination test, or some inspection test, or some audits, some verification. All this will come under the category of appraisal. Third is the issue has happened in the company. There is an environmental impact which is likely to happen. Now this environmental impact, you may arrest it within the factory. For example, some pollution is getting created out of your product. If this pollution is not discharged into the external environment, then whatever pollution is created is an internal failure. If this pollution is discharged, for example, your manufacturing process creates a toxic waste. Now what you do is you use some machinery and rework on this toxic waste and then release it into the environment. This rework of toxic waste is not a prevention cost. It is an internal failure cost. You may think that it could be a prevention cost because we are not releasing it to the environment. Not releasing it into the environment converts an external failure into an internal failure. So that will become an internal failure that have been produced but not discharged into the environment. And cost incurred into activities after discharging waste into environment, this can have certain penalties and fines as well. You may have certain penalties and fines which can come under the external failure cost. Yeah, the generic classification which I said, internal cost and external cost. Costs which have a direct impact on income statement, costs which are imposed on society at large. Lot of governments are trying to, governments and a lot of organizations, the organizations which strive to protect environment, they are forcing companies to convert the external cost into an internal cost. When you convert any external cost into an internal cost, automatically external will come down, internal will go. Organizations are not spending much on this because unless it is mandatory, they are not focusing on this area. The reason is simple, because if you focus on this, your cost is going to increase. None of the organizations were doing effluent treatment in the dyeing industry. They were not doing effluent treatment in the dyeing industry. Reason is simple, it was not mandatory. If I have to do it, I'll have to incur a huge cost associated with it. The machinery and other costs were huge in nature, so that is why organizations were not doing it. Statute came in. Because of statute, you are now forced to do it. Okay, this is what I was saying, that there are three stages. First stages is you will have to identify the environmental cost. There are certain direct environmental cost like energy, certain raw materials, transportation. All these are direct costs. Water is also one of the environmental cost. Consumables, this could be one of the environment. Certain costs could be hidden. So your objective is to do a scrutiny of the general ledger. You do the scrutiny of the general ledger. After doing the scrutiny of the general ledger, identify what are the environmental cost. After identifying the environmental cost, you'll have to pass this on to the products. Using some suitable basis, and then you will have to work at controlling the environmental cost, or using this for the purpose of decision making. This is what I was talking about. EMA requires an intense review of general ledger. Some expenses can be hidden as overhead. So there is a need to do a review of your general ledger. Once you identify them, you will have to pass it on to the products using some appropriate basis. You can use activity based costing for this purpose. Using the concept of activity based costing, you can pass on these costs to the end products. Now, what are the decisions which can be done with the help of EMA? We have seen it earlier also. Earlier there was areas of application of EMA, that is technically like decision making. There you saw product pricing, budgeting, identifying environmental costs, understanding the impact of environmental cost, decision making. So all those areas EMA was used. Here what they are saying is more on the basis of product, that is rationalization of products. What is rationalization of product is, you may want to remove certain products. You may want to change the pricing of certain products, different pricing of certain products, re-evaluation of the profit margin, because earlier the profit margin would not have been calculated properly. Why it was not calculated properly is you did not consider some of the environmental costs which were hidden as overheads, or these environmental costs was not passed on to the end product using certain suitable basis. So different pricing of products, re-evaluation of profit margins, phasing out certain products, redesigning the products so that they are more environment friendly, redesigning the products so that are certain investment decisions you will take up. When you take up certain investment decision, for the investment decision analysis, for calculating NPV as well as IRR, you can use the concept of environmental management accounting. If you remember, we did one case study in the decision making chapter where the focus was on considering non-financial factors or ethical consideration. There was one case study where a project was to be taken up and there were certain labor related issues, and the land which was to be taken, you had bribed and taken that land. You were converting a forest land into a normal land. That analysis was also using the concept of EMA. The concept of EMA was to be used in analyzing that project. Calculation of NPV or IRR for investment decision. So that investment project should have been done with the help of EMA understanding. Now, techniques to identify environmental cost. That is, how do you identify what are the environmental cost an organization incurs? The first technique is called, I think, input output analysis. You have, I think, 3-4 technique: input output analysis, life cycle costing, activity based costing, and flow cost analysis. I think these are the 4 I remember. Input output analysis is, what you do in input output analysis is you track the amount of input which you are buying and you track the amount of output which has been created. In between, there will be certain waste which would have happened, because if your input is 100 kg and output is 80 kg, you have indirectly wasted 20 kg. That is waste of, if it's a precious resource, then you're wasting a precious resource. So In your books of accounts, what you will say is raw material cost 20 lakh, but what I may have to call it as is raw material cost 16 lakh, wastage of raw material 4 lakh. If you're wasting 20% or 10%, whatever is your process wastage, wastage is an environmental cost. Raw material could also be an environmental cost. Raw material could also be an environmental cost if it's a raw material which is something which can cause harm to the environment. You'll see one case study where I think there's one raw material called cadmium. You're going to use that raw material, so that raw material is going to impact the environment in a negative manner, so that's a challenge. Traces inflow of raw material and outflow of finished product, helps in measuring wasted material. Flow cost accounting also records this material flow, records the material flow as you move from one stage to other stage. Raw material stage, then WIP1, WIP2, WIP3, WIP4, and become a finished product. What is this WIP1, WIP2? Raw cotton, then it becomes something called as gind cotton, then it becomes called as yarn, then it becomes a fabric, then it becomes a garment. These are the various process of manufacturing a shirt. So these processes needs to be done. Flow cost accounting will record the material flow. In this process, the material flow is split into three. One is called material, that is the basic raw material which is input into the process. Then there is systems. Systems are basically those costs which you incur to convert this raw material into a finished product. Systems is in-house handling cost of raw material, in-house handling cost. And third is delivery and disposal. After the FG is produced, you either deliver it to the end customer, or if it turns out to be a bad product, you will have to dispose it. So there are three types of cost which you will incur. One is called as material cost, second is the systems cost, and third is delivery and disposal. The next two technique I think you are aware of: life cycle costing and activity based costing. Life cycle costing basically says that when you are analyzing the environmental cost, please calculate the environment cost over the entire life cycle of the product. Rather than looking it for 1 year, you analyze it over the entire life of the project, and this will also ensure indirectly that environmental damage is not happening, or whatever environmental cost you are incurring, you are assessing it at the beginning. Even we saw this in life cycle costing. When you assess cost at the beginning, you can take certain corrective measures. You can end up taking the corrective measures relating to these costs. Activity based costing is what will happen is you will see certain problems where the environmental cost will be passed on to the product, saying the basis could be on the basis of DLH, or on the basis of machine hours, or do an equal distribution, or do it on the basis of output produced. That is wrong. Activity based costing concept needs to be used. You categorize your environmental cost into multiple subcategories, and you can pass it on to the end product using volume of waste, toxicity of waste, cost of treating different types of waste. So whatever, for example, you will see a cost called as water. So water needs to be transported. Water is an environment related cost. Water needs to be passed on to the different products using the quantity of water consumed rather than DLH or machine hours. One of the environmental costs, they were giving something called this planting trees. Planting trees is an environmental prevention cost. This needs to be passed on to the various products on the basis of number of trees planted. So you will have to look at an appropriate basis and then pass on that environmental cost, rather than passing it on the basis of DLH or machine hours, which we normally do. Objective is to remove environmental cost from general overheads and allocate on the basis of suitable allocation base. Yeah, controlling environmental cost, that is where I was talking about the different categories of environmental cost. I think you have waste, you have water, you have energy related cost, you have consumables related cost. All these costs an organization need to understand and then control it. The first cost is called waste. When you analyze a waste, you will have to first understand what is the waste, where is the waste getting created, and how much is the waste getting created. For this, you can do something called as input output analysis, or another name called as mass balance approach, where you compare the output which has been created with the input which have been used. Mass balance approach can be used to find out how much material is wasted in the production. We compare amount of material purchased with the product yield, and objective would be to cut down on this waste which is getting created. Some of the waste will have to be then passed on to the environment. You will dispose it onto the environment. When you dispose it on the environment, there is going to be loss of land resources, and there can be greenhouse gases creation. All this will lead to environmental impact. You will have to reduce the waste, reduce the environmental impact, reduce your own cost. Water, there are two costs associated with water. One, you incur a cost to buy water. You incur a cost in order to use water. Second, you also incur a cost in order to dispose of the water. So after your processing is done, you cannot pass on the water in the same manner into the environment. You cannot dispose it off into the environment. There is a treatment which is needed, water treatment which needs to be done before it is passed on to the environment. So next cost is water. Energy is basically the fuel related cost. So you can, in this technique, what they say is you will have to use certain initiatives which are more environment friendly. For example, air conditioner. When you are using an AC, there are certain ACs which are called as 5-star rating ACs. These ACs are expected to have lower energy consumption, so please use them. When you are using a machinery, there can be two types of machinery. One machinery which will have lower fuel consumption, another machinery which can have higher energy consumption. So use machineries which have lower energy consumption. So you'll have to use those machineries which have lower energy consumption. Transport and travel, this is one tricky area because the cost of this can be hidden as overheads. The cost of this can be hidden as overheads. Again, identify the cost and I look at ways. One of the example they have given the detailed theories using electric vehicles, are using those vehicles which have lower fuel consumption, are those they also talk about something called as, for example, if you're distributing your products to multiple location, you can do something called as route optimization. When you do route optimization, again your fuel consumption will come down. Consumables and raw material. Consumables and raw material, subset of that is waste. Okay, subset of that is only waste, because whatever raw material you are using or consumables you are using, raw material is called the major product or direct material, consumables is called as indirect material. Understand where the costs are being incurred and based on discussion with the management, identify are there any ways of controlling this. This was tested in that case study for some 4-5 marks. Techniques to identify was tested for some 4 marks, and these 4 classifications. So this was a 14-mark kind of a question and 6 marks were from the case study, but balance areas whatever was from a general theory got tested for 14 marks in exam. Okay, now comes the EMA, the last part of the EMA. What are the reasons for controlling environmental costs or advantages of controlling environmental costs? Both are technically similar. Why should I control environmental cost? Now, if you don't control environmental cost, you will be penalized either from the government side or there are certain organizations which strive to protect environment and they will get into certain strikes, lockouts, or there will be some protest against the plant. One of the plant in Tamil Nadu went through this issue. Which plant was going through this issue and that is closed for 1 year or 2 years now? Yeah, Vedanta's plant or the Sterlite plant. So that went through a lot of challenges because there were issues with the product which they were manufacturing and that was expected to impact the environment. That was expected to impact the environment. So even if there are no statutory obligation, it becomes critical for an organization to work on this. Unless you do this, it will lead to challenges from a lot of people. So reducing carbon footprint. Carbon footprint is basically the impact on the environment. Second, it could be from a regulatory compliance which is needed, and it can also help you in cost reduction. I think this is copied again. Role of EMA in decision making, correct costing of products, different pricing, re-evaluation of profit margin, phasing out certain products, useful for NPV analysis, IRR analysis, investment analysis, all that. Advantages, 2 advantages of your EMA. One is cost reduction. Second, you can improve revenues also. You can improve revenues. There is a possibility of selling the product at a premium. Also, what happens is not only selling the products at premium, for example, if you install a solar power plant or a wind power plant, I'm not sure whether that is given now, but government used to give something called as renewable energy certificates. I'm not very sure if it is still practical, if it is still in practice. These renewable energy certificates needs to be purchased by different companies. So when you are producing environment friendly power, One is you get revenue out of it. Second, these renewable energy certificates were also sold by organization and they were getting revenue out of that. There are companies which were harming the environment. These companies had to buy renewable energy certificates from the companies which are indirectly protecting the environment. So one, it can give you premium pricing, it can cut down cost, and third, it can even provide you an alternative source of income. It can provide you an alternative source of income itself. Disadvantages is, if you are trying to focus on improving the environment, a lot of external cost will become internal cost, which will lead to increase in cost. And unfortunately, despite doing all this, sometimes if you fail, there are going to be penalties. So those are the two issues: increase in cost to comply with legal and regulatory requirements, and cost of failure, cost of cleanup and fines due to poor environment management. Again, I'm repeating, this is an extremely important area from an exam point of view, going to be tested. It has been tested multiple times in exam till now.